Good morning, welcome to this update on Monday the 3rd of October. I'm Tom Colley and I'll talk you through the markets and the news this morning. Last week was a very confined week in terms of price. Major currency pairs trading within ranges, within symmetrical triangles, etc. There were, however, a couple of events that created a high degree of volatility. The first one being OPEC announcing that there would be an agreement to cap the production of oil. This drove the oil price significantly, and it currently sits above $48. This event is potentially only still, or is unconfirmed. The details won't be confirmed till the 30th of November, and until they are confirmed, I will remain sceptical about whether this agreement actually comes into place and is more than just a rumour on the part of the OPEC members to drive price higher in the short term. The reason I think like this is we've continually through the summer had rumours and meetings of the OPEC members and always talk of agreements, but those agreements never actually been reached. But they did create a rise in the price of oil and also some volatility. The other item last week was the Deutsche Bank news. Deutsche Bank are facing a $15 billion potential $15 billion fine from US regulators. This created a lot of uncertainty. There was even talk of another Lehman type banking crisis, which in all honesty is somewhat irresponsible, because it was only affecting one bank. It was driven by a fine rather than market events. But also, the European banks are much better organised or much more secure than they were prior to 2008. On Friday there was a rumour, and it was, I believe, only a rumour because it hasn't been confirmed, that the 15 billion fine had been negotiated down to around 5 billion, which gave us some respite from the pressure that the previous news had created. But as with oil, I don't believe, or my understanding is that this isn't confirmed yet, so both these items have the potential to continue creating volatility. Going forward into this week, we are looking at potentially another somewhat confined week until we get to Friday when we have non-farm payroll. We're hoping, and there certainly is potential, that the result of that data could move the market so that they break out of their current ranges. Let's have a look at the news item by item first for today. Well, overnight we had an Australian bank holiday, so be aware of that. Certainly the Aussie dollar and potential other Asian markets will be lacking some liquidity because of that. Today we also have a German bank holiday. Again, will reduce liquidity within Europe, but not quite as substantially, because obviously it only forms part of the market for the euro. We have manufacturing PMI from the pound, which will, again, post-Brexit, will be interesting. We got some really good figures last time. We're not expecting quite such good figures, but these figures should be good because the UK is benefiting from a low pound and still has access to the EU, open access to the EU export markets. Over in the US, we also have the ISM manufacturing PMI this afternoon. Overnight, it certainly will be interesting. We've got a speech from RBNZ, that's the Reserve Bank of New Zealand Governor Wheeler, at 2:30 a.m. But before we speak to you again in the morning, we also have the Aussie cash rate announcement and rate statement. The expectation is that price or the rate will hold at 1.5%. I would tend to concur with that, but we'll be looking out to see what comes out of the statement and if we can draw any conclusions from that. And we'll look to do that on tomorrow's update. Okay, across to the charts. Well, as I said, I've already said, we're very much confined within a range here. We're in a bigger symmetrical triangle on the US dollar index here, but we also have a more shorter term one Yeah, we had the end of the week. We've got non-farm payroll. We are being influenced by the U.S. elections, and the next presidential debate will be interesting to watch at that point. So we will be looking potentially for non-farm payroll to move price out of this range, above this level, below the lower level, in order to give us some direction for the majors and minors. Over on the yen, US dollar JPY, we're seeing again consolidation within a range here. However, we are now approaching this trend line here, and we have potential for price to break out to the upside in this market, which is really what we've been waiting for. However, there are two trades here at the lower end. We've still looking at the $100 level as being anticipating Bank of Japan intervention. However, we now have a level at 101.80, which we will look for a break and close above before a pullback to take this market long. We could well be waiting until non-farm payroll for that to happen, but we will be monitoring it obviously throughout the week. This, however, any sort of breakout here, it's important to have your rules and stick to your rules. What constitutes a close above in order for the level to be retested? What time frame do you want that close above to be? Otherwise, you are at risk of trading erratically. So not just this trade, but in terms of consistency going forward, have rules for what you consider a break and close above to be. Does it need to be a daily break above? Will a 4 hour suffice? Do you need a close above and then a further close above? You need to have those sort of rules written in stone, because continuity is really the backbone of success in trading. Okay, over on the pound, well, we're back down to the lower levels where we reached immediately post-Brexit vote. The interesting thing here is that most of the pound cross pairs are also around key levels like this. I've shown just one here, which is Euro GBP. You can see it's back at the highs here. So any break to the downside on the pound will be combined with a break to the upside on Euro GBP, more than likely. So we'll have a number of alternatives, and we'll be looking for the best setup in order to take that particular trade. But it doesn't necessarily mean the trade would have to be taken on the pound. Have a look at the crosses, keep an eye on the crosses. You may have a favourite based on your interpretation of the strength of the various currencies. There isn't a lot of strength or weakness in any of the currencies at the moment, so there isn't a lot of strength versus weakness divergence that we really like to play on, but you might have a favourite in that, so that you could trade maybe GB CAD, something like that. Okay, over on the Aussie, again, we've got news coming on the Aussie overnight. We're not expecting much to come out of it. We're confined with the range that's marked here. And in this market, we've got a significant trend line here, which you can also draw back, I believe, to about 2013, depending on how you want to draw it. But clearly, it's been rejecting this trend line continuously over recent weeks. So we need a clear break above that to have any long side in this market. To the short side, this is the 4 hour chart. We've potentially got a head and shoulders formation setting up here. So we would be looking for a break and retest of this lower level, which is the same level through here on the daily chart. So that would be a break and retest of the head and shoulders neckline to take that to the downside. So that really shows the type of caution we're going into this week with. I don't believe we've got any potential orders to place immediately this week. Everything is dependent on the market giving us direction. And here's another one, New Zealand dollar. We've got a descending triangle in this case on the daily chart. The key level at circa 7,200 here, or I've got it drawn at 7,220. We can see prices being confined within the triangle. We'll be looking for a break and close below to take a trade certainly down to the bottom of this channel here, potentially down to this level at about 6,950, which would constitute the lower side of the box range through there. But again, we need the signal in terms of a break to the downside in order for us to be in the market and trading, and that characterises where we are at the moment. We may be like that most of the week, waiting for non-farm payroll. Obviously, we'll give you a better update on what we potentially expect or what the reactions might be to different scenarios in non-farm before that occurs on Friday. Now, guys, if you like the way that we trade here at Phoenix Blue and you want to see what makes Phoenix Blue different, how we combine fundamental analysis, technical analysis, and commitments of traders analysis, we have free trading events, 4 hours free trading with our top fund managers once a month in London. If you are interested in attending that, it is absolutely free and without commitment. You also have the opportunity to speak to existing Phoenix Blue members who will be able to tell you how these methods have brought around benefits and greater success within their trading. If you are interested in this, just pop onto the contacts page on the Phoenix Blue website. Tell us you're interested. In the next day or two, the events page on the website will be updated with the dates of the event, and you will be able to, or this month's event, and you'll be able to apply for an invite to come to the event through that page. Okay, guys, that's it for today. As you can clearly see, it's another week, I'm afraid, a somewhat frustrating week for standing back away from the markets, waiting for the markets to give us direction. Don't be tempted to jump in just because nothing's happening. We need to be looking for high probability. We need to be protecting our capital. Okay, have a great day and we'll speak to you tomorrow.